Good day everyone, welcome back to this channel. In today's video, we are going to look at a really easy strategy that you can use either on Deriv or on Weltrade, on the boom and crash pairs or the pain and gain pairs. Both of them work exactly the same, so let's get straight to the video. Alright, so let's quickly go through a few things before we start. We are going to look at a really simple strategy that we can follow on how to get the trades that we need. So as you know, if you looked at all the previous videos, when we are on crash, we're going to look for sells. When we are on boom, we're going to look for buys. Same with pain and gain. Gain, we are going to work on buys, and pain, we are going to work on sells. So if we are in a bullish trend and we are, for example, on crash 1000, we want to wait for a high to get swept, and then we're going to follow an entry model that we are going to use. And this is going to be a liquidity sweep. We are going to wait for a break of structure, and then there's two different entries you can follow. You can follow a aggressive style entry, or you can follow a more conservative style of entry. So the more aggressive one, as soon as we have a sweep, we have a break of structure, and we close below that low, we are going to enter directly and then wait for price to continue down. Alternatively, we can draw our fib, for example, and we can wait for a retrace into a POI, and then we can continue the trend down. So this is going to work exactly the same for the buy pairs as well. So how do we identify a high and a low? So a high and a low we are going to identify with two candles. Easy as that. Two candles. So if this is a high, this needs to consist of an up candle and a down candle. If this is a low, it needs to consist out of a down and an up candle. And that's how easy we identify our highs and our lows. So this is not too long ago. So let's look at this piece of price action right over here. This is a really good example on how we can take this trade. So if we zoom out, you can clearly see price is in an up move. On the higher time frames, we're making higher highs and higher lows. We came up, and here is a big push down. And this was a significant, you can see clearly crash was in an uptrend on the higher time frames as well. But we can trade the trades, the pullbacks in between, because we are on crash. So if we look at this piece of price action right over here, we can clearly see a high was made right over here. We had a low, and then we had another high. So high, low, high that broke this high right over here. So everything in between is going to be internal structure. So as soon as we took out this high right over here, sorry, why is this a high? Because we have an up candle and a down candle. So this is a valid high. So when price came up right over here, remember we are on the 1 hour. So this is the 1 hour high. Where was the last low, 1 hour low that took out this high? It was this one right over here. Why was it this one? We have a down candle and an up candle. We have a low right here. We have a low right here. And we have a low right here inside of this move up. And this, you can take these lows as targets. So what happened when we sweep this 1 hour high right over here? Let's go down to the 30-minute and break it down. So here you can see, let's just refine this now. So there's our low on the 30-minute. We took the high. So for me, a very first sign of a reversal, right? For me, we are on the 30-minute. It would be this inverse fair value gap that has been formed. So inverse fair value gap has been formed. We broke through it. As you can see, this huge candle literally broke through this low, and then we are targeting these lows now. But this low would confirm the break of structure. So let's go down to the 15-minute. There you go. As you can see, so on the 15-minute, we broke that 30-minute inverse fair value gap right over here. We had a 15-minute break of structure right over here. Why was it this one? Because, sorry, this one right over there. It was this one because we have a low up candle. So this, the lowest point would be my new low. We created another low in an up candle. So the newest one would be this one right over here. So we had a break of structure on the 15-minute already. We broke out of this 30-minute inverse fair value gap. We had a small retrace into our zone, and then we had a big push down. So let's go even down one more to the 5-minute. So here you can see that 15-minute break of structure right over there. We took out this low right over here. So how can we enter from this trade? Now again, there is more than one type of entry. We get an aggressive entry and we get a more conservative entry. So let's quickly do the aggressive entry. So when you are on the 5-minute, right, and you see, all right, we closed below this inverse fair value gap. We had a 5-minute break of structure. So what we want to do now, as soon as we broke this 5-minute break of structure, we closed below this inverse fair value gap. You can enter on the close right over there, and you can put your stops above the last high, and you can simply target. That's not a good risk to reward. So where would the other one be? It would be this one right over here. And that gives you a total of 2.57 risk to reward trade. And as you can see, we had a big push down. So this is more on the aggressive side of entry. Now let's see what happens when we have a more conservative type of entry. So let's go back to the 1 hour. Just delete this. So on the 1 hour, right? We want to wait for this one to be broken at first, the 1 hour low. Does this candle break the 1 hour low? And it took this one in the meantime as well. But do you agree? It broke this low right over here. So I'm just going to mark out the next hour candle that started after this one has closed on the 1 hour. So we can just have a mark on where the new hour starts. So now we closed below, we broke this low, we broke this low. Now we can go back to like the 5-minute, for example. As you can see right over here, this is where the new candle starts. Now, when we want a more conservative entry, look what happens. Let's wait for a break of structure to the downside on the 5-minute. So where was this break of structure? It was this one right over here. So the hour started. This low was the previous one. We broke through this structure. Now you can enter again straight over there. This is a more conservative entry. You can put your stops there, and you can target at least minimum a 1 or 2 risk to reward. And there you have your entry right over there, and these targets have been met as well. If you want a more conservative entry on the conservative entry, you can draw your fib from this high to the lowest point. It will be this one right over here. And as you can see, Price literally, let's just delete this. Price literally retraced to our 50% zone. We have an order block area right over here that lines up with the 50%. You can take your trade on this order block right over there. You can put your stops above these highs, and you can target these lows right over here. And that is a 3.24 risk to reward trade. So that's how you can look at the market: aggressive entry and more conservative entry. Hopes this makes sense. So let's look at one more example. Let's just delete everything. Here we go. So now you can see we had these moves right over here. All of these lows has been taken, right? This is a nice low as a target. But what do we have? We had this big push. We had a reaction right over here. Where did we get a reaction from? We got a reaction from this fair value gap right over here. Do you see? Have our reaction. In our reaction right over here, what do we have? This higher time frame low that's been created. You can see we broke through it as in the previous example. We tapped into this fair value gap right over here. We created a smaller high right over here. Look what happened. We had a liquidity sweep right over here. So let's go down to the lower time frame and refine this. So again, you get two types of entries. We have the sweep right over here. This was that low that's busy retesting. That low right over there. So we took this high. Now we wait for that break of structure. Low was created. Did we close below it? Right over there. We closed right over there. Price went up. It took out this high right over here. And now where's the last valid low again that needs to be taken to confirm we have a trend change? So this was the high. This was the low that created this one. So this would be the more conservative low. Again, we created a low and an up candle. So this is also a low. So when we go down to the lower time frames, we can clearly see we had that liquidity sweep. On the liquidity sweep, we had a break of structure right over here. So what can you do? You can enter your trade, stops above these highs, and you can target where's a low right over here, or you can target a fixed 1 or 2 risk to reward trade. And as you can see, we got our trade right over there. If we zoom out, there was that low that's been taken. That's a 2.52 risk to reward trade. So this is the aggressive one. Now, if you want to wait for like a confirmation, again, we had this push down. Now you can start drawing your fib from this high. It's pushing down. Haven't touched our 50% yet. This low, there's our 50%. So again, price tapped our 50%. What do we have? We have an order block area resting right over here. And as well, as you can see, liquidity has been swept, break of structure, retrace, and it's on the higher time frame, 50%. You can take your trade on this entry right over here in this order block area, and you can take your stops. Because it's a huge gap, I would minimize the risk and I would go for at least above this high where this liquidity has been taken right over there. And you can target a fixed 1 till 2, or you can target the most obvious low. In this case, it was this one here as well, if you stayed in that first trade. And that's how easy you can get your trades. So I hope this video helps you a lot. Please leave a like and subscribe. Let me know in the comments what do you think, and then I'll see you in the next video. Cheers.